My name is Sarah Rosen-Wortel, and I have the great privilege and honor of being the president of the Urban Institute. Nearly two-thirds of the low-income working-age adults lived in households where income spikes or dips were significant at least 1 month of the year. The families that face volatility in their income often face more profound effects than simply if they had a smoother, lower income. And we know that this problem of volatility is not likely to mitigate, it's likely to grow, given that so much of the structure of our economy is moving towards more variable and contingent work in lots of different ways.
For a number of years, particularly when I worked in tax policy and in tax administration, I've worried about the ways in which we simplify policy or make assumptions. The way the tax code works is it's sort of a once-a-year snapshot that ignores all of the things that happened in between to get to that point in time. And in fact, I work for a company that is at the end of that process. Our customers come to us after all of the year has happened and present the facts as they've occurred. But the reality is they lead far more complicated lives than what's assumed, because underneath that single point in time in the year when one files a return, there is a very complicated story. And it is getting more complicated, as you'll hear today, as time goes on.
There's roughly 18% of families who are low income and working age who have 0 months of the year where they earn their average income. So every month their income is 25% above or below this average. So we tried to see what characteristics could someone have that would be correlated most with a volatile income. And of course the obvious one's self-employment. The second thing is your household income is likely to be volatile if adults are moving in and out. Sometimes an adult comes in with income, sometimes an adult with income leaves. And then finally, starting or ending a job, of course, is hugely related to whether your income's going to bounce up or down in any given month.
The U.S. Financial Diaries project was a project where we followed 235 low and moderate income families for a full year, trying to track all of their income and expenses, all of their use of financial instruments, whether on the books or off the books. The U.S. Financial Diaries project was trying to pull back some of the curtains of these assumptions that have been built up around annual totals, by which we measure almost everything in the United States when it comes to household finance. That is a big category of what we're seeing of American households falling into, is employment without stability.
Prosperity Now, we have a network of volunteer income tax assistance preparers, or the VITA program, which essentially provides free tax preparation help to low-income families. What you see is an increase in people coming in with 1099s, which is the contract labor, or you could call it from the gig economy, however we want to talk about that. Last year, even though the number of people coming into VITA sites was roughly stable, there was an almost doubling of the number of people who came in with 1099s as a part of their returns. If you come in and expect, I've had a steady job through the year, I am a home health care provider, I work at a daycare, but I show up and I have 1099 income, you have probably not had your taxes withheld. And you come in expecting a refund and in fact have a tax bill. And it creates another kind of volatile spike for the family.
Since the 1970s, almost all of the income growth, all of the middle class income growth can be attributed to women. 66% of part-time workers are women. And women are overwhelmingly more likely to opt for part-time work. Women also tend to be the primary caregivers, not just for their own children, but also when you have family members who are sick. There's a lot more volatility, I think, that is associated with women being in the workforce, and I think that has implications for families that we need to address.